Hey there, I'm Michelle Coyle. I help queer entrepreneurs start up and scale. And today we're going to be talking about how to raise capital for your socially conscious business. So I'm going to cover three things today. First, we're going to talk about when to think about raising capital. And then we're also going to talk about the two major ways that most people look into raising capital when they're talking about a small business. All right. So first, let's talk about why we need to raise capital and when to start thinking about it. This is one of those things where most small business owners I talk to when I very first start talking to them, this is not even on their radar. They're not even really thinking about this. In fact, a lot of them are approaching the business as the same way that they approach their consumer spending. And so they're looking at it as, well, I'm not going to spend spend more money than I have. They're looking at it like a checking account that they're trying to balance. Remember when you were, 12 years old and somebody taught you how to balance your checking account and make sure you weren't spending more than was in there? They're looking at that and saying, well, I don't want to put any expenses out until I have the money in the bank account to do it. They're considering that bootstrapping, and they're worried about, going in the red at all. That is not how we approach business, and it's not how we grow a business, especially. Anytime that you are wanting to grow your business beyond it just being you or beyond its basic iteration or a few people, you're going to find times where there's more money that needs to go out right now in order to ensure growth in the long run. Okay, so there's a few examples of this. There's lots of examples of this, but a few really common ones, right? Either maybe you need money to hire people so that you'll be able to take on more clients later and service more to, and increase your revenue that way. Maybe you need to invest in advertising so that you can get more people in the door in terms of, leads, and you can sell more, and that way you can grow your business that way. Maybe if you are a product company, you're going to be needing to invest in inventory, in storage for that inventory, in ways to fulfill that inventory before you can even really think about selling in any kind of a major way, right? So there's lots and lots of reasons why we're going to need to sometimes look at getting capital before we have that to pay back. And a lot of times where we can leverage that capital and a little bit of money today that we need to invest will then make a lot of money tomorrow. Okay, so let's think about when we want to start thinking about this. And the answer is usually way before you think you need to. Okay, so for all of our clients, we're building out a financial forecast model, and you should be doing the same thing. You need to have your finances forecasted several years out so that you can see exactly how much you're going to need to spend to get to your revenue goals in the end. So we got to set a goal, and we got to see, okay, how are we going to get to it? And usually that means we're working backwards. All right, if I know that in 5 years I want my business to be bringing in $3 million a year, what do I need to do in year 4, year 3, year 2, year 1 in order to get that? And a lot of times that's going to involve, okay, I'm going to have to get a chunk of money here so that I can hire this person, or I'm going to have to get a chunk of money here so that I can develop this product, or so that I can get it manufactured in order to be able to sell it, and here's where it comes back later. When we forecast it out like that, then we're actually able to see here's where the ROI comes in. And that's what allows us to be able to take these risks in ways that are a little less scary to us, because we see why we're doing it and we understand the big picture and the point of it. When it comes to raising capital, there's a couple of major ways that people usually think about it. The first one is to go ahead and take out debt, or we call it in business, we call this leverage, because it's not the same as taking out consumer debt. And I really, really want to stress this. If you are looking at debt, which really usually means for a small business, just borrowing money from your bank, taking out a small business loan or a business line of credit or something like that, you cannot think about this the same way you think about your consumer debt. I want you to remember that there is good debt and there is bad debt. If you own a house and you have a mortgage, that's probably good debt, because your house is probably worth more than it was when you first bought it and first took out that mortgage. If you took out student loans, like I did for my MBA, I took out $140,000 worth of loans, which is a lot at the time. For me, it's paid off in spades over and over and over. That was good debt. That was a smart thing to do. If you take your credit card and you take all your friends out to the club and you don't have the money to pay for that, that's bad debt. Okay, so it's not the same, and stop treating it all like it's the same. All right, so we're talking about good debt. We're talking about money that we are borrowing from the bank to put into our business, hopefully at a relatively low interest rate, so that we can then invest it and get a larger ROI down the line, right? So if I know that I'm going to need to do a big old advertising campaign over the next few months, and I know that my ads are working, and that for every dollar I spend on advertisements, I'm going to get, $5 back, then it makes sense for me to go ahead and borrow that money at a low interest rate, put that in and get it back, paying back the interest, and I'm making a lot of money over the top of it. Okay. When it comes to debt with your bank, right, you need to have this relationship established before you really need to. So it's just like when you take out a credit card as a young person, hopefully, I don't know if you had a good financial education growing up. I didn't have a great one, but I had to learn some of this stuff over time. But hopefully somebody told you that the best way to manage your credit card was to charge a little bit, pay it off, charge a little bit, pay it off, so that you could establish good credit. It's the same thing with the bank. What you're going to want to do way before you need any money is to go and take out a small business loan with a good business bank. You want to, maybe that's just a $20 or $30 or $40,000 loan. And then you just want to pay it back. Just establish that history, because I promise you are not going to be able to just ever walk into the bank when you need $1 million and go, hey, I'm Michelle and I need $1 million. Give me $1 million. They're going to say, who are you? I have no relationship with you. What do you want? A lot of people just learned this the hard way when it came to, taking on SBA loans and everybody looking to the banks. And then a lot of the banks said, if we don't have an existing relationship with you, we can't do anything for you. And so it's no time like the present to start establishing that relationship, whether you're actually going to need that or not. It's good. You're probably going to need it. Okay. So I shouldn't even say it that way. If you're going to grow a business of any size, at some point you are going to have a month where you don't have enough cash in the bank to invest in the way that you need to invest to grow the business. So go ahead and establish that way before you think you need it. Most of the time, when we're talking to service businesses, we're talking about bank debt when we talk about raising capital or maybe working capital lines or something like that. We're not generally getting into the second thing, which is selling equity. Okay, so the second thing to do is to sell equity, and this is what product companies do, and this is what companies that are bigger often do. When you think about raising money, or all these big Silicon Valley tech firms and things like that, they're selling equity in return for investment. So if you have a big vision or a big company or something big that you're trying to do that's tech-based or product-based or something like that, you may want to think about selling equity. So selling equity is literally just taking on partners and giving them a share of the business for the money that is coming back in. Now, there's a couple of different ways that this can manifest. You can have partners that are voting members and are basically not equal to you, but in some way, have authority and have say, or you can issue shares and have non-voting partners and say, for a specific amount of money, you're going to get this much of the business. Just like when you're buying stock, this is the same thing. They're selling equity. Actually, when you buy stock on the stock market, you're just buying a tiny little piece of equity in that company. I want you to be really, really careful with selling equity. Okay, so the first thing that I really want to stress to you, if you're a small business owner, unless you're doing something huge, like you're going to be the next Uber or something, then you really need to think about retaining 51% of your equity, at least at first, because as soon as somebody else gets 51%, or even a combination of other people get more than 51%, they are now in control of the business. And you can get outvoted on everything. So if you want to retain sole control, make sure that you retain 51% of your equity. Now, in order to be able to sell equity, this requires a lot of strategy and planning and a lot of work, because you're essentially raising money, and you're out there trying to convince people that they need to invest in your company, and they're obviously looking for a return on their investment. So this means that you need to be sure to be able to show why this is a good investment. Okay. Don't just go out and think that just because you're doing something that's socially good or good for humanity that people are going to give you their money to invest. Some people might, but most people are going to say, cool, that's great. What are you going to do with it? How are you going to get it back? When am I going to get my money back? And what's my return going to be? So you're not going to get that exactly right, but you need to be able to show them that you have a plan. Here's what we're doing. Here's how we're marketing it. Here's when we expect this to return. Here's where your money is going to come back in, and here's where it's going. If you can't do that, most people are just going to laugh you out of the room, or very politely say, that's really nice. That's nice what you're doing. I'll call you back some other time. And they're never going to call you back. All right. So whether you're going for bank debt or whether you're selling equity, you need to have these finances modeled out for several years. Anyone that is investing in the business is going to want to see, where does this go and when does it come back? If you don't know that, then you're not in integrity to go ahead and ask for anybody else to invest in that business. You've got to understand when you're getting your money back and when they're getting their money back, or you're not ready yet, right? So make sure that you've figured out your plan in order to do that, and start thinking about it now. If you're in business and you haven't done any of this stuff, start thinking about your strategies now, because you definitely don't want to find out once you need this money that there's no way to get it because you haven't done the pre-work in order to do this. That we always want to think about these types of things when it's not an emergency, so that when the emergency comes, we're ready. All right. So that's what I got for you today. If you like this video, be sure to hit right here, subscribe to my channel. We're talking about all the business stuff all the time. And if you have any other topics or anything else you want to talk about, go ahead and pop it in the comments. Or if you have something to say about what I just said, pop it in the comments. I'm always happy to hear from you and talk to you guys. I know this is daunting, especially right now, and this is really heavy stuff to talk about, but I think it's important that we continue to share this and continue to do business as best we can. So you know what? Get out there, let it shine. I believe in you. Talk to you soon.